Welcome to another BAR walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're going to be going over BAR Area 2. This is Section E. This is an application topic. Calculate the research and development costs to be reported as an expense in the financial statements. And we're going to be doing that the SuperfastCPA way, which is diving straight into the questions to learn the material. Now, if you don't know much about our strategies, make sure you go to SuperfastCPA.com and sign up for our free 1-hour webinar training. In that 1 hour, we will teach you the key ingredients to passing the CPA exam so you don't waste months or even years of your time failing exams. And after you watch that, you're going to want to learn more, so make sure you also check out becoming a Superfast CPA Pro member. Pro members get access to the full versions of these videos. So in today's video on YouTube, we are only going over 5 questions, but again, Superfast CPA Pro members will get access to the full version of the video, which has 10 questions, so that they can get a little bit more help and a little bit more understanding. So if you like this and you like our other products and our other videos, make sure you check out becoming a Superfast CPA Pro member. Now with all that, let's dive straight into the questions. All right, here we are at question 1, and something I always like to point out when it's an option is a habit you want to be in is to read the last sentence of a question first. So you see how this part is bolded right here? I do that in my videos just to kind of give you an idea of what you should be looking for if it's available. You know, of course, there will be questions that are only like 1 or 2 sentences long, but when you see something like this, you want to read the last sentence first because that will give you context for what the question is about, and that will help you move through material more quickly, especially on test day. So let's go ahead and do that here. What amount should Martel report as research and development expense for year 1? So again, imagine you were at the exam and you read that last sentence, you immediately know you're dealing with research and development expenses. That's something that's very valuable to know as you're reading through the rest of the question. So let's do that here. Martel Corp incurred the following costs during year 1 related to its research and development activities. So let's go through these. $80,000 to purchase equipment used exclusively in a new R&D project. The equipment has no alternative future use. $150,000 in salaries for scientists and engineers working directly on R&D activities. $40,000 for materials consumed in laboratory experiments for product development. $60,000 for marketing research to assess customer interest in a potential new product. And $25,000 to develop a prototype machine that the company expects to use in future manufacturing. So again, which one of these would they report as research and development expense compared to something else? So if you have any idea how this works, then maybe give this a try, maybe pause the video. But if you don't really know what research and development costs are or how to decide what is and what isn't, that's okay. We're going to use this question to start learning that. So let's go ahead and take a look at the explanation together. Okay, here we are. The answer is A, $270,000. That's how much is going to be R&D expense. So let's read through this. Under US GAAP, R&D expenses include costs that are directly related to research and development activities. That makes sense. And have no alternative future use. So it's specifically for R&D and that's it. Here's the breakdown. First off, the equipment. Since the equipment is used exclusively for the R&D project and has no future alternative use, the full cost is expensed. So that's $80,000 of R&D. Salaries, $150,000. These are direct R&D labor costs, so they are also expensed because those salaries are for people who are working directly on research and development. The materials, these are the materials consumed directly in R&D activities, so those are expensed as well. Now let's get to other pieces that probably won't be expensed. Marketing research. This is not considered part of R&D under GAAP and is classified as a selling expense, not as R&D. So any research you're doing to see if people would like the product, that's not really research and development. So again, specifically when it comes to marketing research, that is not going to be considered R&D because it's classified as a selling expense instead. And then finally, prototype machine. If the prototype is expected to be used in future production, such as it's a future economic benefit, it is capitalized and not included in R&D expense. So those last 2 are not going to be R&D expenses, but the other first 3 will be. So we total those together. $80,000 for equipment used directly in R&D, $150,000 for salaries for people who are, again, working directly in R&D, and then the $40,000 of materials used up directly. That's $270,000 of research and development expenses. And we learned a little bit about what is classified as a research and development expense in this question. Now let's go to the next question to learn a little bit more. All right, here we are at question 2. What amount should Brighton report as research and development expense for year 3? Okay, let's go up to the top. Brighton Co. incurred the following costs related to a product development project during year 3. $90,000 to purchase specialized testing equipment expected to be used in future manufacturing operations after the R&D phase is complete. The next is $18,000 in depreciation on the above equipment, so on the equipment we just talked about, which was used throughout year 3 exclusively for R&D activities. $110,000 in salaries for engineers and designers working on the new product. $35,000 for materials consumed during R&D, and then $28,000 for quality control testing after commercial production began. So again, what is going to be counted as research and development expense? We learned a little bit about this in question 1, so you might have a little bit of an idea, but if you still don't really know, that's okay. We are using this question as well to learn. So let's go ahead and dive into the explanation together. Okay, here we are. The answer is B, $163,000. That is the amount that is going to be considered R&D expense in this situation. So let's go through this. This is kind of just expanding a little bit on what we learned in question 1. If equipment has an alternative future use, which we know makes it so it can't be R&D, its purchase cost is capitalized, but depreciation during R&D is included in R&D expense. So we're going to dive into that a little bit more here in a second. Salaries and materials directly used in R&D are expense. We knew that. And then costs after commercial production begins, such as quality control, are not R&D because that's not the research and development phase. After you started selling the product already, you can't be researching and developing a product if you're already selling it. Now here's the breakdown, and we're going to again talk a little bit more about this R&D for the depreciation. $90,000, that was the equipment purchase. That is not included in R&D because it has a future alternative use. So it's going to be capitalized. But because they did use it for R&D in year 3, even though it will have a future use, so that makes it so that they can't expense the whole thing, they can take that capitalization that happens in year 3, that depreciation, the $18,000, and since it was being used for R&D in year 3, they can include the depreciation as R&D for that year. But in any year where they stop using it for that specific R&D project, they start using it for the alternative future use that we know is going to happen, then that depreciation won't be considered an R&D expense. And then the rest we already knew. The R&D salaries, the materials used in R&D, those are all things that, of course, are going to be included. So we take the $18,000 of depreciation plus the $110,000 of salaries plus the $35,000 of materials, and that's $163,000 of R&D in this situation. Again, we just kind of expanded on what we were learning before, and we learned that depreciation for equipment that is being currently used for R&D, but it still has an alternative future use. Again, the depreciation can be R&D for the time that it is being used for R&D, even if it has an alternative future use. So with that, let's go to the next question. All right, here we are at question 3. What amount should Durant report as research and development expense for year 4? So very similar question throughout all of these, but different ideas and different materials in each question. Durant Corp incurred the following costs during year 4 related to a new product under development. $95,000 for salaries of engineers working on the R&D project, $25,000 for materials consumed during prototype development, $14,000 for depreciation on R&D equipment that has future alternative use, $20,000 for legal fees to file patents for discoveries made during development, and $18,000 for administrative oversight of the R&D department. So some things we've already learned about in this question and some things that we haven't seen before. Think about this, give it your best shot, pause the video if you need to, and when you're ready, come back, we'll look at the answer together. Okay, here we are. The answer is D, $134,000. So let's go through this. Again, we've already learned about some of this. What do we include in R&D expense? Obviously, the salary that's tied directly to R&D, the materials that are used in R&D, and we just learned about this in question 2, depreciation on equipment with future use while used in R&D, that was the $14,000. So even though it has a future use and it's going to be capitalized and not fully expensed in R&D, for the time that it is being used in R&D, that depreciation can be an R&D expense. Now let's talk about what is excluded from R&D. Legal fees for patent filings, these are capitalized as intangible assets. They are not included as research and development costs. And then administrative oversight, that is also excluded as general and administrative costs. It's not direct R&D. So again, administrative expenses and legal fees are not going to be included in R&D. So we learned a little bit more. Now let's go to the next question. Okay, here we are at question 4. Which of the following costs incurred by Darrow Corp during year 6 should be classified as research and development expense under US GAAP? Okay, so a little bit different format here. The question is directly at the top, and then we have the information below. So let's look at all of these and see which ones would be research and development. $38,000 for routine quality control testing on products already in commercial production, $44,000 for troubleshooting issues in existing manufacturing processes, $51,000 for periodic maintenance of lab and production equipment, and $35,000 for customer support services related to technical product inquiries. So based on everything we've learned so far, you might be able to guess this, but this is a little bit different than what we've talked about so far. So think about this, give it your best shot, give it your best guess at what would be considered R&D expense, and when you're ready, come back, we'll look at the answer together. Okay, here we are at the answer D, $0. So this is something new. We haven't fully talked about this yet. So if you didn't know that that was the answer, that's okay. We're going to talk about it. Under US GAAP, R&D expense includes only costs associated with planned efforts to discover new knowledge or develop new products or processes. The following activities are excluded. Routine quality control testing, that is considered part of normal production and operations, not R&D. Troubleshooting existing processes, these are operational adjustments not aimed at new development. Maintenance of equipment, general maintenance is not R&D, even if the equipment is used in R&D at other times. And then finally, customer support, providing technical support or responding to product issues, is a selling or administrative function, not research or development. So again, anything that has to do with routine quality control or routine troubleshooting or maintenance of equipment or customer support or things that are similar to that, those are not going to be R&D expenses. None of them qualify. So the answer is $0 in this case. None of it qualifies as R&D expense. Now with that, let's go to the next question. Okay, here we are at question 5. What amount should Kelter report as research and development expense for year 8? Okay, let's go to the top. Kelter Inc. is developing a new software product for sale to customers. During year 8, the company incurred the following costs: $95,000 on planning, designing, and initial coding efforts prior to achieving technological feasibility, $120,000 on coding and testing activities after technological feasibility had been established, $18,000 for packaging and duplicating completed software for sale, and $25,000 for customer training materials. So again, what is going to be considered research and development expense? Now, based on everything we've learned so far, you might have a guess at this, or you may have seen something about this in a previous video, or you may have seen something about this previously in, one of our videos or in your review course. But if you don't know how to do this, that's okay. We're going to look at the answer together right now. Okay, here we are at the answer C, $95,000. That is how much is going to be research and development expense in this situation. So let's go through this. This is one more thing that you need to know. Under US GAAP, for software developed for sale, R&D costs are expensed only until technological feasibility is established. After that point, costs are capitalized until the product is ready for general release. And if you remember, we did talk about that point right there, the capitalized costs for software development. We talked about that in a previous video, but right now we're talking about the research and development before that. And again, it's only before feasibility. So this $95,000 before feasibility, that is research and development. But everything after feasibility, or that is, again, kind of related to what we talked about in question 4 for packaging and duplication or customer training, these 3 things are not going to be research and development costs because they're all after feasibility. Before feasibility can be R&D. Anything after feasibility is either going to be capitalized or expensed as something else, not as R&D. So therefore, only $95,000 is incurred before feasibility, and that's the only amount that's going to be reported as R&D expense in this situation. So that was just one more thing that we needed to know, the one more thing to learn. Now with that, we've gone over the first 5 questions, but before we do anything else, let's do one more part of the SuperfastCPA CPA process called pillar topics. Now, the idea behind pillar topics is as you're going through the questions to learn the material, you will notice the things that keep popping up. You've seen 2 or 3 or 4 questions trying to teach you about what is considered research and development expense and what isn't, or again, whatever you're noticing in the questions as you're going through your review course, those are the most important things that you keep noticing. And you take a moment and you write these out in your own words as pillar topics, as the key points, the things that you need to know for the exam. And as you do this each day, you are building your own personal repository of the most important things you need to know for the exam based on what you learned directly from the questions. So let's go ahead and take a look at the pillar topics for this video. Okay, here we are at the pillar topics. Again, this is basically just a summary, the key points of the things that we learned from the questions. So let's just go through each of them. First off, only costs directly related to research and development are included in R&D expense. These include salaries for R&D employees, materials used in R&D, and depreciation on equipment used in R&D, but only while it's being used for R&D. So if something, well, let's just talk about that in the next point. Equipment used for R&D is treated differently depending on whether it has future use. If the equipment has no future use, the full cost is expensed. If it has future use, the cost is capitalized, but depreciation during R&D use is expensed. And that was something we talked about quite a bit. Legal fees for patents and general administrative costs are not part of R&D. Patent costs are capitalized as intangibles, and admin or overhead costs aren't included in R&D expense even if they support R&D activities. That's just a rule, that's just something you need to know. Now, routine testing, quality control, and troubleshooting existing products are also not R&D. These are part of normal operations and are never included in R&D expense under US GAAP. And then finally, for software developed for sale, and again, this is something that we did talk about in a previous video, but we weren't talking about R&D in the previous video, we were talking about capitalized software development costs. So you might have already kind of seen some of this, but again, for software developed for sale, only costs before technological feasibility are R&D. Once a working model is established, all further development costs are capitalized, not expensed as R&D. So again, those are the pillar topics. Those are the basic things that we were supposed to learn from those questions. And with that, that is the end of this YouTube version of the video. Remember, in today's video, we only went over 5 questions and the pillar topics, but SuperfastCPA Pro members are going to get access to the full 10-question version of the video when we post it in the member forum. So if you like this and you like our other videos, make sure you check out becoming a SuperfastCPA Pro member because you will get access to the full versions of these walkthrough videos. And the easiest way to learn about and become a SuperfastCPA Pro member is by going to superfastcpa.com and signing up for our free 1-hour webinar training. In that 1 hour, we will teach you the key ingredients to passing the CPA exam so you don't waste months or even years of your time failing exams. And again, after you watch that, you're going to be given a better path to learning about and becoming a SuperfastCPA CPA Pro member. So check out the webinar, check out becoming a Pro member. If you liked this video, make sure to like it and leave a comment. I hope this was helpful, and I will see you in the next video.